Good morning. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. Businesses are urging the government to fast-track the rollout of COVID-19 vaccines as they feel the pinch from tighter restrictions in NCR and the nearby provinces. Businesses are anticipating losses in the next 2 weeks as only essential travel to and from Metro Manila, Rizal, Cavite, Laguna, and Bulacan, collectively known as NCR Plus, is allowed. The tourism sector was hoping to get a boost during the Holy Week break, but the stricter restrictions will only end on April 4th, that is Easter Sunday. Acting NEDA Chief Carl Kendrick Chua says the economy could no longer afford to have its key cities revert to the strictest form of quarantine, saying a blanket and prolonged community quarantine could cost some 2.1 billion pesos in daily wages. Chua earlier said that he is supporting localized or granular lockdowns instead. The Philippine Chamber of Commerce and Industry says smaller retail businesses will also be affected by these additional restrictions. PCCI President Benedicto Yuhico said that while lockdowns are helpful, the true solution lies in the arrival of the vaccines and the quicker rate of inoculations. The Federation of Filipino-Chinese Chambers of Commerce and Industry said the private sector is looking to help import more vaccines. The group said consumer confidence may be fully revived this year if there are more vaccines. Latest data from the DOH shows that 330,000 people have been inoculated so far. Foreign businesses are also calling on the government to adopt international best practices in stemming the virus transmission. Investors are still on edge this morning. That's after, of course, we saw a topsy-turvy Monday session. Recall yesterday, the restaurant stocks had declined vis-a-vis the supermarket stocks, which had led the charge there. And those had risen even as the index sank by as much as 1.7% yesterday, before then paring its losses to 0.6%. But as we can see in my Bloomberg terminal this morning, the pain is not yet over. We are seeing that slide still at 6,300 levels. We are down by 0.02%. Now, this according to Jonathan Ravelas, he's of course the chief strategist at BDO. The market's collapse from the opening, of course, yesterday triggered some investors to start the bargain hunting because recall that on Friday last week, we already had quite a slide and some had entered during that sell-off. He did mention that the gauge could drop to as low as 6,000 in the near term if the 6,400 level does not hold. Of course, we have been below the 6,400 level since yesterday, and he does mention this depends on the pace of the virus infection. So I just want to take a quick peek at which stocks are leading the sell-off this morning here. Recall that yesterday, as I mentioned, it was really the retail, the restaurant stocks. A bit of a mixed picture here with AEV, actually the worst performer this morning, together with San Miguel, Globe, and Robinson. So it does seem to be like URC, Globe, these were the better performers yesterday, seem to be going towards the other side, whereas you do see some property companies like Ayala Land and SM Prime holding their weight here together still, with the ones that were sold off yesterday, like Jollibee, for example. Meanwhile, I did want to take a quick peek at how equities are going all over the world. You can see that they're definitely not in the same direction as us. The Nasdaq in particular overnight was up by 1 2/10% over in Wall Street, and even the benchmark S&P 500, quite some gains there. And the rest of Asia Pacific seems to be moving along with this tide. You can see the Topix and Nikkei 225 enjoying quite some gains here. So the rest of Asia seem to be in the green. The Taiwan's TAIEX as well up by 0.7% this morning. Now, something else that might be weakening not just our index and our equity stocks, but also the Philippine peso. This is according to Fitch Solutions. They are seeing the peso to weaken against the dollar over the next 2 years. It's as, of course, we struggle to contain this still raging pandemic. What are they now expecting? The local currency might be settling at an average of 48.4 to the greenback. that is vis-a-vis what they had first expected, which was a strengthening to as low as 47.50 this year. Now, I just want to show you how the peso has actually performed compared to the rest of the region. You can see that on my terminal here, how we are definitely no longer in the top. Yes, last year in 2020, we were actually one of the best performers. And look at us now. We are the sixth in place year to date. Now, according to Fitch Solutions, in the long run, they're maintaining the forecast of the peso to weaken even further to 50 to the greenback. And finally, I just want to show the oil prices here, especially as Fitch Solutions is now raising its oil price outlook to an average of $63 per barrel. So higher than they have expected. Right now, it's trading at 61 per barrel. And speaking of oil, you do have one stock to be watching out for. That is Phoenix Petroleum, opening in the red now, sliding heftily by 1.5%. This, as they say, that their board has authorized the management to negotiate for the possible sale, transfer, mortgage, or disposition of the properties. And this will be decided upon during their meeting on April 30. Recall that Dennis Oy's Chelsea Logistics had also just announced their sale of to-go shares to SM. Meanwhile, has now filed a tender offer for 47.15% stake in to-go at a price of 8 pesos and 50 centavos. Meanwhile, let's check in on the headlines we're keeping our eyes on. The sales of imported cars in the Philippines slumped by 15% in February. That's as passenger car sales continue to decline since the pre-lockdown period. The Association of Vehicle Importers and Distributors said their member companies and global brands sold 5,400 vehicles last month. That's compared with over 6,300 in February 2020. The year-to-date sales dropped by 10% to about 10,700. Avid President Jan-Feb Perez Agudo said the industry already ended 2020 on a high note, despite the sales dropping 50% in the first half after dealerships closed during the expanded ECQ. Perez Agudo says the group acknowledges that recovery will not come quickly. But she said they remain focused on taking baby steps while counting on the government to provide a long-term recovery plan, including the creation of more jobs and improving the ease and cost of doing business. Now, PhilGuarantee-backed MSME loans have risen to over 8,000 by the end of February. Now, citing a report from the corporation, the finance department said the loans were worth more than 952 million pesos for the MSMEs. That's about 360% higher than the 207 million pesos worth of loans guaranteed by the company in the same period in 2020. The top industries that benefited from the program were wholesale and retail sectors, manufacturing, transport, storage, and communications. PhilGuarantee says they are targeting to increase MSME guaranteed loan portfolio to 4 billion pesos and grow the number of beneficiaries to 8,000 companies by the end of the year. And live hogs being transported to Metro Manila are nearing 200,000. That's as the government moves to augment pork supply in the capital. This is according to the latest figures recorded by the Agriculture Department since February 8th. Now, most of the hogs that were sent to NCR were from Calabarzon, Western Visayas, and Mimaropa. While Central Luzon delivered over 42,000 kilograms of pork on March 21st, which brought the total carcass volume to 1.37 million since February 8th. Many confusing terms which highlight one and the same. The leash has tightened over the National Capital Region as well as other COVID hotspots. Here to tell us what that means for an economy already struggling to recover, we have with us AJ Montesa of the Action for Economic Reforms. Good morning, AJ, and welcome to the broadcast.
Good morning, Danny. Good morning, everyone.
Good morning, AJ. So, AJ, they said no more lockdowns, so to speak. They're not calling this a broad-based lockdowns. They're saying it's granular. But was this really necessary? Some are saying that this haven't really given the effect that they wanted, and that if you don't see increased contact tracing or testing anyway, it might not necessarily improve the situation. What is going on here?
So First, I'd like to comment maybe the levels that the BC community, whether it's the GCQ or the ECQ. I think many households and Filipinos are very confused as to where we are. But I think when the government decided to lift restrictions, for example, I think they were very overconfident, or they miscalculated the positive trend that we experienced later in the year. And really, the efforts to loosen restrictions failed because the government was not effective in implementing contact tracing, and a referral system for COVID-19 patients was not functional. So we've seen a lot of problems that even if the government is implementing these quarantines, the government officials themselves have been violating health protocols. Pronouncements have been unclear, and they've provided a false sense of security. And I think this is effectively a sort of a lockdown. We're still encouraged to not go out of our homes, to not go outside in public. I think the government needs to provide resources for relief and social amelioration. I think a quarantine is necessary. I think if you look at places like New Zealand, who had completely eliminated community transmissions, the very moment that they were able to get new cases, they lock down or they quarantine completely. And I think that's what the steps we need to take, given that we're reaching record high numbers again. We're reaching a second wave of this pandemic. The government needs to be very aggressive in its implementation of a quarantine to stop the spread of the virus.
Okay, so you're agreeing that other countries, it has actually worked for them. However, we still have just overtaken Indonesia as this hotspot in terms of average daily cases, an increase in cases. Tell us, with the vaccination program now rolling out, have you seen some sort of progress here? Are we doing something wrong compared to other countries that now have the vaccination program in place, or do you think that it just takes a little bit more time, but these numbers are not going to be sustained?
Well, number one, I don't think we can completely rely on vaccination as the sole strategy. I still think that contact tracing and massive testing are still important policy directions that we need to go to. We need to implement a system. And the reason that people are confused as to why we keep on switching back and forth between community quarantines is we don't have a data-driven approach to this. People don't see the numbers, it's not transparent, and it doesn't seem that our governance is scientific and data-driven. So that needs to be properly implemented if we're going to contain this virus. But still, I do think that vaccination is an important step towards achieving herd immunity. And there still is a problem as regards the public sentiment and apprehension towards receiving a vaccine. So the public still is not very forward in terms of actually being willing to receive a vaccine. So that's also one problem that the government needs to address.
Okay, so it's not just all about the vaccine. You mentioned earlier on that we need ayuda for the MSMEs that will be hurt here, the jobs that were already, especially the tourism sector in Holy Week, which was supposed to be reopening now. Can we do this every time there's a lockdown? And has the government actually taken this into consideration? Do we have the funds to do this, especially as now we understand that it might not just be right now, it can actually keep on happening later on?
So the problem that we're facing now is, again, we keep coming back and forth to lockdowns, and your question is really, every time that we have a new lockdown, can we give a new round of ayuda, of relief? And I think the government needs to make sure that when we implement a lockdown, it's implemented as aggressively as possible so that we don't keep going back and forth, so that this does not become a recurring problem. Second, I do think that we do need to provide social relief and social amelioration this time around. The last one came last year. So I think it's appropriate to have another round of social protection again this time. I think in terms of the effect on our economy, due to the base effects of having a recession in the past year, I don't see us having as deep a recession, but still we're not out of the woods. I think we're still going to experience probably a 1 to 3% contraction of the economy. And I think that calls for the government to implement a very aggressive fiscal stimulus for households, for medium and small enterprises as well.
Okay, AJ, last question on what you mentioned. You were expecting 1 to 3% contraction. For what period? Do you think that the government, they've been saying that we can still reach the 6.5 to 7.5% growth for GDP this year, despite all of these, so to speak, granular lockdowns? What's your take on that?
So that 1 to 3% figure is a really ballpark figure. It's very hard to pin down what our economy will look like in the first quarter. So I'm talking about the first quarter of this year. Last year, many economists were very optimistic that we might have a 3 to 4% improvement in our economy. But with the current developments, I think a continuing recession, is more likely. And I think our country will be very hard pressed to achieve those growth targets. With the trajectory we're currently at now, we'll still have to deal with the pandemic first. If we want to increase consumer confidence, if you want people to go out and spend money in the economy, we have to make sure that it's safe enough for them to go out. We have to make sure that there's no signal that the government will continue to go back and forth between lockdowns. So we need to implement an aggressive one now, and scale back the virus as quickly as we can.
Okay, so the 6.5 to 7.5% growth for this year seems to be aspirational for the time being. Thank you so much, AJ Montesa from the Action for Economic Reforms.
Thanks, Danny, for having me.
And that's the first look into the business day. Today's Tuesday, March 23rd, 2021. Catch Business World live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.